What's up, guys? It's your Money Cat. This week has been a crazy week in the stock market, led off by the Wall Street Bet, meme stocks, GameStop, AMC, BlackBerry, you name it, Dogecoin. And then on top of that, we've had a market broad sell-off in the big names in Apple, Microsoft, Facebook, Amazon, AMD, all these big tech stocks have fallen significantly. So we're going to talk about whether this is just a brief correction or a more major pullback, even into a territory of a market crash. We'll be looking at two charts in this video, mainly the SPY chart and the QQQ. In the SPY chart, this is the 180 days 4-hour time frame. Looking at the local view, about a month ago is where we began this bullish trend line. And we've defended it several times on its way. And it seemed like the SPY was just happily chugging along, climbing higher and higher and higher. Until this week, when we broke through this bullish trend line. And we did have a bounce back the very next day, but it actually got rejected right off the level of that continued trend line. So at the least, locally, we know that there has been a change in its trend. Also concerning, on its way down, SPY broke through all three simple moving averages. It broke through the purple one, which is the 14-day moving average. It broke through the yellow one, which is the 50-day moving average. And most importantly, especially looking at now a little bit long term, it broke through, it fell below this green line right here, which is the 180-day simple moving average. That's actually a big deal because the last time we broke below the 180-day moving average was back in September. And if you remember, we had a pretty good sized correction back in early September. For SPY, that was about high to low. That was about a little over 10% correction. So if we take 10% off from all-time high, SPY would be at about 345, 346 level. In my eyes, I see one possible support level coming up very, very soon, and that is around 365. I don't see it as a very strong one, but the signs are there for a potential support. So that level is actually when we hit a local high here, we got rejected. We tested it one more time, got rejected once more, and then broke through. Then the price kind of hovered around that level, kind of supporting the price. And one last time, it was able to validate it as support level here. And that's kind of when the run took off even more. So at this point, that would be our first level of defense. On this chart, on the 180 days 4-hour time frame chart, after that, we go all the way down to about 325. And there is really nothing in this gap that serves as a potential support. Now we're looking at the 1-year daily chart, and as you can see, there is a large gap here, just like I showed you on the other time frame. One saving grace might be this green line kind of in the middle of this empty space. That's the 180 days moving average viewed on 1-year daily chart. So it is possible if the first line of defense is broken, then the price could possibly bounce off of this moving average line. However, if we look at the previous price action, then I don't really see anything that could potentially line up with this to provide additional support. So I also don't see this moving average as strong support. And that's why I said 325 seems like a much better support, as it acted as resistance before. The price got rejected. Next time it came back, broke through, but that level was also able to defend itself as support 2 times before. If we do fall all the way down to 325 level, then that would mean from all-time high of 385, we would be down about 15%, which would be a good size correction. Now, this is where it gets interesting. What if this 325 level gets broken as well? Long time ago in one of the videos that I did, just for fun, I mentioned that SPY is following a megaphone pattern. So it began right here, and on the top side, this one quite didn't reach, but on the top side, we had this rejection. Then at the time, this rejection. On the bottom, it started here, and it held support here. Then it held support here. So megaphone pattern is where the top side continues to go up and the bottom side continues to go down. So if pattern held true, then after hitting the top side, we would go all the way down to the bottom side again. Now, this is still just a what if, hey, let's think about this situation kind of stage. There is no supporting evidence that this will happen, and we can always prepare, reassess more if and when the price continues to kind of fall below these support levels. Again, we have one level here, 365, and then another strong one at 325. And that is a 15% move from all-time high. So we do have lots of time to prepare if this happens. I'm always kind of keeping this in the back of my mind because since the March low, the market has rocketed up so high, everything's kind of overvalued. And I know right now there is no such thing as valuation, but I do think we will come back to more of, that actual legit valuation at some point. Also, just looking at the trading pattern that's been going on, especially in light of the Wall Street bets this week, there is just a lot of hype and craze in the stock market right now. I'm not saying that's good or bad, but what that does is make the market unpredictable. And when people can't even remotely try to predict, they panic because it is unknown, the fear of unknown. They don't know what's going on and they don't know what will happen. So then they get fearful and start pulling their money. They prepare for the risk that is just the fact that they can't really predict the market. So what you want to do is start forming a plan. The plan may never go into effect, and that is fine because that means the market has recovered and it probably continued to go up. But I think it's much better to have a plan and be able to execute that plan quickly if this were to happen, rather than price gets to here, 325, and then now you're in panic, in a hurried mode, trying to figure out a plan, a contingency plan. Now we're on to triple Qs. This is back to the 180 days 4-hour time frame chart. The triple Qs, the QQQs, its most recent bullish run, well, it began actually earlier than SPY. It began right here, which was in the middle of November. And since then, it's been following this bullish trend line. It defended it as support here, here, and here. And here, even most recent downfall, when we had this big downfall, it actually briefly held it as support and then bounced back, but then it came crashing down. And today, it actually fell, broke through that trend line. Also, just like SPY, on its way down, it broke through all three moving averages, the purple line, the yellow line, and we are slightly below the green line, which is right here, the 180 days moving average line. We might have some small supports from previous lows, so probably these two levels. So we might have a little more kind of jagged line, but I think the real support level is going to be around here, which should be, that looks like 303 or so, 305, let's call it. And that is the long time standing previous resistance when we made all-time high back in the day right here. Because this level defended as resistance throughout such a long period, I think this will serve as a more powerful support than these just local possible support levels. If the 300, 305 level support fails, then similar to SPY, there is kind of a big empty space, all this space right here, that doesn't have a definitive support. There is potential for, some minor support levels. Again, this 180 days moving average line on a 1-year daily time frame that could work as a support. There is a small gap right here, and if you look at it, it tried to approach the gap, but that support held, and then since then the QQQ Nasdaq has been on a great run. So that gap actually could be an interesting level where price could approach that gap, and once it approaches it or fills it, then it could do the same thing as it did here and have a trend reversal and head back on up. But aside from that level, I don't see anything that really jumps at you. So I just marked it as a kind of a broad range, ranging from the 305 level to 260 level. So that is a pretty big gap. This week's market sell-off is kind of absurd. It doesn't make any sense, especially in the tech sector. We've had Tesla, Apple, Facebook, Microsoft. None of them were bad. And actually, everyone's raving about the earnings, especially Microsoft, Apple, Facebook earnings was pretty good too. So I can't really say that this sell-off is because of the earnings. So really, the only possible reasons could be that the market was just overheated, and no matter what the company did in the earnings, it was bound to fall off, which is kind of true, which has been true for last several months. But on the heel of probably the best earnings that Apple did and Microsoft did, I don't know about that. And then the other part of the speculation is because of what's going on with GameStop, with AMC, with BlackBerry, and all these heavily shorted stocks, people are pulling away from these other stocks that have seen massive gains since March and putting it into those stocks. Whether it's just people pulling in money to put into GameStop and AMC and other stocks even more, or whether it's institutions taking profit from these big name stocks to shore up their accounts and cover their margins. There is no proof for this, so this is all just speculation, but really this is kind of the only reason that makes logical sense. I really can't see people being disappointed and selling after the kind of earnings report that Microsoft presented, the Facebooks and Apple had. I'm personally prepping for a situation where there is a major crash after all this GameStop, AMC, these stocks are resolved. But at the same time, I think this could be a great opportunity to pick up some of the most fundamentally sound, great companies like Apple, Microsoft, these companies on sale. These companies are going down for no reason involving their own company. This is all because of some external force. The last thing you want the market to be is being unpredictable. And right now, that's just kind of what the market is. So make sure you're prepared for any possible situation as the market continues to become more unpredictable and it kind of unravels itself.